Have you ever wondered if you could start trading with just $100 and actually make it grow into something meaningful? The truth is, most people think you need thousands of dollars to get started in the market, but that's not true. With the right strategy, mindset, and discipline, $100 is more than enough to learn, practice, and even start seeing real results. The key is not to chase big profits immediately, but to focus on learning the mechanics of trading, understanding risk, and building habits that will protect your money while you grow it. When you begin trading with $100, your first priority should be capital preservation. This means every trade you take should be calculated with a clear entry and exit strategy and a strict limit on how much of your $100 you are willing to risk on a single trade. A common mistake beginners make is thinking that small accounts can handle high risks. They can't. Losing just $20 on a single trade would be 20% of your account, and repeated losses like that can destroy both your capital and your confidence. Instead, a good rule of thumb is to risk no more than 1% to 2% of your account per trade. On a $100 account, that means risking $1 or $2 per trade. This might sound small, but the power of compounding and consistent wins over time is what turns small accounts into larger ones. Another important step is choosing the right market and instruments. With $100, you want to focus on markets where you can trade in small positions, like fractional shares of stocks, Forex pairs, or cryptocurrency microlots. Avoid instruments that require large minimum investments or heavy fees, because trading costs can quickly eat away at your tiny account. For example, many brokers now allow buying fractional shares, so even expensive stocks like Amazon or Tesla can be accessed with just a few dollars. This gives you exposure to real markets without needing to deposit thousands of dollars up front. Before risking your $100 in live trading, paper trading is a must. Paper trading is essentially trading with virtual money, which allows you to practice strategies, test entry and exit points, and get comfortable with your trading platform without losing real money. This practice is crucial because $100 doesn't leave much room for mistakes. By simulating real trades and analyzing your results, you'll learn faster and avoid emotional mistakes that often destroy small accounts. Finally, mindset plays a huge role in trading success, especially starting small. It's easy to feel frustrated when $100 doesn't grow as fast as you want, but the reality is, starting with a small account is like starting from the ground up. It teaches discipline, patience, and risk management. Every trade, win or lose, becomes a learning opportunity, and over time, as your skills improve, your $100 can grow steadily into $200, $500, or more, but only if you stick to the rules, stay patient, and avoid the trap of taking reckless risks in search of quick profits. Now that you understand the importance of mindset, risk management, and starting small, let's dive into the specific strategies that work best when trading with $100. The first strategy is scalping, or short-term trading. Scalping involves making multiple trades in a day to capture small price movements. Since your account is small, trying to hit large gains on a single trade is unrealistic, but scalping allows you to gradually increase your account with consistent small profits. For example, if you can make $1 or $2 per trade on a $100 account, completing 10 to 20 successful trades in a week can add up and slowly grow your capital. Scalping requires focus, patience, and a solid understanding of technical analysis, but it is one of the fastest ways to turn a tiny account into a larger one. Another strategy suitable for $100 is swing trading, which is slightly longer term compared to scalping. Swing trading means holding positions for several days to weeks, capturing medium-sized price moves. This strategy reduces the stress of constant monitoring and allows you to trade fewer, more calculated trades. For a $100 account, swing trading can be ideal because it avoids overtrading and helps you maintain discipline. Using tools like support and resistance levels, moving averages, and trend lines can help you identify good entry points. The goal here is not to get rich overnight, but to let small, calculated gains compound over time, which is the foundation of building a small account into something significant. Position sizing is another crucial aspect. With $100, even one wrong trade can heavily impact your account if you don't manage your position size correctly. For example, if you risk 2% per trade, that's $2 on your $100 account, you can divide your trades into micro lots, fractional shares, or small quantities to ensure you stay within this risk limit. Many new traders make the mistake of thinking they need to trade full positions
positions to see results. On the contrary, controlling position size protects your account and allows you to survive losses while waiting for high probability trades. Survival is the first rule of trading. Without it, you won't have a chance to grow your account at all. Leverage is another factor that can both help and hurt a $100 account. Some brokers offer high leverage, which allows you to control a larger position with a small amount of money. While this might sound tempting, it's extremely dangerous for beginners. Leverage can amplify profits, but it also magnifies losses. A $100 account with 50x leverage can be wiped out in a single trade if used recklessly. The key is to use leverage sparingly, if at all, until you have experience managing risk and controlling emotions. Remember, slow and steady wins the race, and learning how to protect your $100 is more important than trying to make $500 in a day. Lastly, one of the most underrated strategies for beginners is journaling your trades. Every trade you take, whether it's a win or a loss, should be recorded. Note the reasons you entered the trade, your emotions at the time, your entry and exit points, and the outcome. Over time, this journal becomes a powerful learning tool. You'll start seeing patterns in your behavior, discover mistakes you repeat, and refine your strategy. For a small account, journaling is like having a roadmap. It shows you exactly what works and what doesn't, which is critical when every dollar counts.
Now let's talk about one of the most important aspects of trading with $100 that most beginners completely overlook: trading psychology. When your account is small, every dollar feels more significant, and that can trigger strong emotions like fear, greed, and frustration. The key to success is learning how to control these emotions and make decisions based on logic, not impulse. For example, after a small loss, it's common to feel the urge to get it back immediately by taking a bigger risk. This is a dangerous trap, especially with a $100 account, because one bad trade can undo all your progress. Instead, successful traders take a step back, analyze why the trade didn't work, and focus on the next high probability setup rather than revenge trading. Discipline is the backbone of small account trading. A $100 account won't grow overnight, and impatience is your worst enemy. You need to set strict rules for when to enter a trade, when to exit, and how much risk to take. Sticking to your plan consistently is more important than chasing profits. For instance, if your strategy only identifies trades with a 60% probability of success, you must resist the urge to take trades outside your plan. Over time, following these rules faithfully will compound your gains and build both your account and your confidence. Compounding is another powerful concept to understand when starting with $100. While $100 might seem small, compounding allows your money to grow exponentially over time if you consistently earn small percentages. For example, a 5% gain on $100 is only $5, but if you reinvest that $105 into your next trade and continue growing, the gains start building on themselves. It's like planting a seed and letting it grow slowly into a tree. The key is patience. Don't expect instant results, because $100 is a starting point, not a ticket to overnight wealth. The goal is to learn, survive, and slowly build your foundation. Another psychological challenge is handling wins. Many beginners get overconfident after a few successful trades and start taking unnecessary risks, which often leads to losses. Maintaining humility and understanding that trading is a marathon, not a sprint, is critical. Each trade should be approached with the same careful analysis and discipline, regardless of whether you are winning or losing. By controlling your emotions, sticking to your rules, and letting compounding work its magic, you set yourself up for sustainable growth. Finally, patience and persistence are what separates successful traders from those who fail. Trading with $100 is as much about building skills as it is about making money. Think of this phase as a training period. Every trade teaches you something, every loss makes you stronger, and every small win builds your confidence. The sooner you accept that $100 is just the beginning and focus on learning, the faster you will see real, consistent results. Remember, the market rewards those who are disciplined, patient, and willing to learn, not those chasing quick riches. Now that we've covered mindset, psychology, and strategies, it's time to get practical. How do you actually start trading with $100 today? The first step is choosing the right broker. When your account is small, you need a broker that offers low minimum deposits, fractional shares, low fees, and a user-friendly platform. Avoid brokers with high commissions or hidden charges, because with $100, even small fees can eat into your profits quickly. Some brokers even offer zero commission trades
and allow you to start with just $1, which makes it ideal for small account trading. Take your time to research brokers, read reviews, and pick one that matches your trading style. Next, you need the right tools and resources. Trading isn't just about clicking buy and sell, it's about making informed decisions. You need access to charting software, market news, and educational resources. Many brokers provide free tools for technical analysis, including candlestick charts, trend indicators, and volume analysis. You should also follow reliable news sources and economic calendars to stay updated on market-moving events. These tools help you identify trading opportunities and reduce guesswork, which is critical when every dollar counts in a $100 account. Once your account is funded and your tools are set up, the next step is planning your first trades. Start with small, high-probability trades that align with your strategy, whether it's scalping, swing trading, or long-term positions. Define your entry point, stop loss, and target profit before entering the trade, and stick to it no matter what. For example, if you're trading a $100 stock position, decide that you'll risk only $2, set a stop loss to limit your downside, and aim for a realistic profit of $5 or $10. Avoid trading on rumors or emotions. Precision and patience are your allies at this stage. Another practical tip is tracking your trades in a journal. Record every trade, including the reason you entered, your risk, your exit, and your emotions during the trade. This may seem tedious at first, but over time it becomes an invaluable resource for improving your strategy. You'll start noticing patterns in your mistakes and successes, which allows you to refine your approach and make smarter decisions. Remember, $100 is small, so every mistake is a lesson and every win is proof that your strategy works. Finally, start small and focus on consistency, not speed. Many beginners make the mistake of trying to turn $100 into $1,000 quickly, and that mindset leads to reckless trading. Instead, aim for consistent, repeatable wins of 2 to 5% per trade. Over weeks and months, these small gains compound, and you'll be amazed at how a disciplined approach can grow your account. Treat your $100 as a learning investment, and every trade you take should teach you something about the market, about risk management, and about yourself. By combining the right broker, the right tools, and disciplined execution, you can turn even a small $100 account into a foundation for long-term trading success.
Now, let's talk about the long-term vision. How to grow your $100 account into something meaningful. The first principle is patience. Trading isn't a get-rich-quick scheme. It's a skill that takes time to master. By sticking to your plan, following strict risk management, and learning from every trade, your account can grow steadily. The magic of compounding is your greatest ally here. Even small gains, when consistently reinvested, can multiply over time. For example, a consistent 5% gain per week might seem small, but over months, that can turn $100 into hundreds and eventually into thousands without taking reckless risks. Once you've built confidence and experience, consider scaling your trades gradually. As your account grows to 200, 500, or more, you can increase your position size while still keeping risk per trade low. This is crucial. Never rush into bigger trades before you're ready. Scaling properly allows you to grow your account without exposing yourself to devastating losses. Many traders fail because they try to force large profits too quickly. Slow, steady growth is the safest and most reliable path. Another important tip is continuing education and strategy refinement. The market is constantly changing, and strategies that work today may not work tomorrow. Successful traders spend time learning new techniques, analyzing charts, studying market trends, and even reviewing their past trades. Your $100 account is a training ground. The more you practice, the more refined your strategies become. Over time, this knowledge becomes your edge, and it allows you to make smarter decisions that increase your profitability. Also, learn to protect your gains. As your account grows, consider setting aside a portion of profits instead of reinvesting everything. This creates a safety net and reduces stress, allowing you to make more rational decisions. Remember, surviving in the market is just as important as winning. Protecting your capital ensures that you can continue trading even when the market turns against you. Finally, embrace the mindset of discipline, learning, and consistency. A $100 account isn't about making a fortune overnight. It's about building skills, understanding risk, and developing habits that will last a lifetime. Treat every trade as a lesson, manage your emotions, follow your strategy, and let compounding work its magic. Over time, your small account can grow into something significant, and more importantly, you'll have developed the skills, confidence, and mindset to handle
larger accounts and bigger opportunities. Remember, trading with $100 is not a limitation. It's a starting point, a classroom, and the foundation for your future success in the markets.